Everybody, good morning. So we got David and Rob, Don, Sergio, Terry, Hugh, Diane, General Rush, good to see you, Craig, Chad, Scott, Gayton, Will, Diana, Doug, Ryan, thanks for being a supporter, JB, Frank, Arturo, Carlene, Ringo, Svenborn, Nancy, Jason, Darren, Larry, Ted, B, Pauline, Aki, Alan, good morning, everybody. Good to see everybody on the stream. And check it out, check it out. Getting a little bit of bounce action. Can we keep the train going the other direction? Let's see. Markets don't typically bottom on a Friday, but we pretty much took out all that supply zone. It could be an all done, and we reverse here. Be very, very careful here. We didn't backfill this at all. So be very careful. Alrighty. Moving on. Wow. I'm just amazed at the price action. All right. So I brought financial reports from the Treasury. Check this out. Financial report of the U.S. government, fiscal year 2024. So this is the most recent one that they put out from the Secretary of the Treasury, which was Janet Yellen before she got replaced. Look, this is a long report. This is not, and this is from the Treasury. This is not, it's treasury.gov. This is not like I pulled it up somewhere else. Diving down in here, I don't have it bookmarked or anything, but we can look at the liabilities of the government. Well, look at this. This is interesting. We've heard 37 trillion parroted. There's 39, almost 40 trillion right there. Total liabilities 45.5 trillion. Total assets 5 trillion. Interesting. But that's not the whole story. Way down in here, we talk about those unfunded liabilities. We talk about what are the liabilities? Federal debt, interest payments, 28 trillion. Federal employee veteran benefits, 15 trillion. Other liabilities, 2 trillion, adds up to $45.5 trillion as of September 30th, 2024. Total assets, 5.6 trillion. These numbers seem to be different than what we've seen. And like I said, I didn't bookmark anything in here. Thought I'd go through it live. Look at, just dig through. Just kind of show y'all the craziness that's in here. Social Security insurance expenditures. Look at this. Dollars in trillions. There's $78 trillion right there. Negative. Social Security net expenditure. $78 trillion. That doesn't look very good. So you add that 78 trillion on top of the 45 trillion. Man, that's starting to look like a problem. Wow, that's a lot more, right? And you just dive down through here and it gets worse and worse, actually. And all in, it's over $150 trillion that we owe as the public right here on liabilities. So even though they commonly parrot that it's only 37 trillion, the Treasury report here even shows 45 trillion. It's not like we're disposing of assets, right? Cash is only 1.1 trillion. Inventory only 400 billion. Loans receivable 1.7 trillion. Property, plant, and equipment 1.3 trillion. It's not like we're liquidating all this stuff. The offset 45.5 trillion. I tell you what, this is a scary report. This problem, it keeps growing too. I mean, we're on a spending bender, if you will. Keep growing, keep growing, keep growing. Right there. And every 100 days or so, we're adding about $1 trillion to that. It's getting to be scary. We're getting up to the peak. 1946, we had 106% of our GDP. And if you take out the, what's funny is they didn't used to count government spending in the GDP. Now they do. So is it really this? Or when you take out the government spending, is it actually like way the heck up here? So this is a straw. Like everybody keeps saying, what's the straw that can break the market? Well, here's a straw that can break the market. All right. Let me know what you think. I think it's a scary report right there. I hadn't really ever dug into it and read it. I was scanning through. I was like, holy bananas. This is kind of wild. And of course, we look at the debt clock. Just keeps ripping. You look at the total unfunded liabilities or whatever, and it's, just a nutty thing here. Total hidden wealth, total, you say we got wealth in the United States, but also when you look at the total US debt, 105 trillion here. Unfunded debt, that goes on top of, see, this is unfunded debt. Total interest paid. So uncounted goes on top of this up here. It's just amazing right there. Our federal deficit going up. It just keeps on climbing. It's a problem that, worldwide keeps going, but who flinches first? That's the problem. Like, now, interesting. Kind of did something different here this weekend. Let's see if it saved it. It did. Check this out. Now, I was just kind of going through, looking at it. I was like, what if I'm a little bit wrong, right? Like, what if the count's slightly different? What if this move, this was a low, obviously, at the end of the great financial crisis. What if this was all the first move? And then COVID was, since it was a fast retrace, what if that was a wave 2? Right? Kind of bottomed in the vicinity of what might be the wave 4 here. Might have a 1, 2, 3, 4, 5 up. 2 bottoming in the vicinity of that potential 4 right there. So then that first move up, maybe that was a wave 1. Wave 2 took a little bit. Then we had a retrace in 2023. Then we had a nice big fat extension off of that. Potentially topping out in a subwave 3. What if, even though that was kind of fast, what if that was a wave 4? And this one took a year, like 9 months. This one took like 2 months. Theory of alternation works. Didn't get overlap, works. What if we're cruising on up for a potential 5 of 3 right now? Where would that put us? So if you take the wave 1 off of the 2 right here, you project it over here, Do it on log mode, not log mode. It just depends on which one you want to look at. So if that's the wave 1, 2, project that off. Grab that right there. Potential to come on up here for equality. We might actually go over 7,000. It's possible. There's a whole lot of confluence inside here. This wave 1 projected off of this wave 4 makes it more likely we might stall in here. 66. We could go on up here. But then what happens, right? After we top out in this move, what happens? Well, potentially, since these are sub moves, look at this potential 1, 2, 3, 4, 5, right there. Completing, we'd go into a 4 of this move, 1, 2, 3, 4, and then we'd enter into the 5 of that move. But then we have this move back here, 1, 2, 3, and we potentially chop into a 4. Might take a few years too, and then push it on up to a 5 there. So I was just looking at it like potentially this could drag out, and we don't do the giant down. Like we just keep this uptrend of lows intact, and we don't do the big down that I've been talking about. So there's potential that maybe we don't do a big correction right away. Maybe this just keeps kicking the can down the road for another decade or two. It's possible. Possible right there. So anyway, always looking at, what might be different. Somebody talking about the fact we had 5 up off of this low, this pullback we did. I was listening to another guru talk about it. The proportions of this is not really 5 up E right here off of this April low. It is very sloppy if it is. Sloppy. Now that does look like 1, 2. Off this low right here, move up, retrace. And then we're topping out in potentially the zone of a wave 3. Wave 4 could come back to 5,800. Could come all the way back down in here. So it's all very interesting, I think. Never know how you're really wrong. So there's the bullish case if we don't do the big correction. A lot of Elliott wave titians I look at, I've tracked it all the way back to the lows we had way on back. I have to go to a month chart, have to go to line chart, we'll have to put it on. So when you go all the way back in here, this low right here, some people smarter than I am, certainly. 1, 2, and then they've got the 3 potentially topping out in here, and the 4, and then we're on the 5. It'd be the 1, 2, 3, possibly the 4, and then we're in the 5. But like I said, that was kind of my start point right there. So if we're working off of that, possibly we don't top out the 5 of 5 of 5 or 5 of 5 or whatever till for another little while. It's possible. Looking at time-wise, that low, that high, off of that low, yeah, we could. If the wave 5 lasted as long as the wave 1 right there, could be on out here. Like I said, another couple decades before we really push the squeeze to it. So maybe my below 4 above 7 is wrong, and we go above 7 and keep tracking and trucking along, and We look at, we're out here SPX like 15, 20,000 in the 2040s, and then we do the big correction. Wave 2 usually bottoms in the vicinity of wave 4, so that would be higher degree 1, and then we do a big 2. I could bottom down here around 7 to 1200. I'd be like, what would cause that? I don't know. Debt problem, debt explosion, you name it. So anyway, thought it was interesting. Thought I'd show it to you. How can I be wrong? There you go. I'm always looking at how can I be wrong? Like, where am I wrong in the market? Now we could have. There is potential that wave 1 and this wave 5 did meet equality right there. That could have been the top of 3. Like, we could have topped out. We could do the next 4 for this one. 1, 2, 3, and this one could take a little while. So if this one was fast, this one could take longer, potentially. I don't know. Or if this one was the slow one, maybe this one's the fast one. I don't know. Anyway, looking at what's crapping in today. Now, as I said, typically we don't bottom on a Friday. It's not a given. We do sometimes bottom on Fridays in the market. But typically we'll make a lower low Monday, Tuesday, Wednesday of the next week. It's just typically the time frame when the market likes to bottom out. Looking down, we've been rallying up pretty good. Potential 1, 2, 3, 4. Might have a little bit of push up into the 15-minute to go. And then we'll see, like, we could get a retrace back down out of there pretty easily. 30 minutes still way on up here, 63. 1 hour still way on up here, 63.60. 4 hour is just right where we are. We came back to that 4 hour like a magnet. Dipped on through, right back in. So do we bounce, go higher, or is this a resistance point? Now, interesting kind of trade I happened across this weekend. What if you go down here? Oh, other way for down. You sell like a 30-cent, maybe even a 20-cent put on the market. Those are like 99% chance of not getting in trouble today. Not bad. Take a 140 point drop. Could happen. Could get you in trouble. I actually picked one up last night on the reopen. It's just interesting. I started playing with this. It's right here. I actually got filled at 58.75 for 20-cent credit. This is ESU 5. It's only good for today. August 4th. I grabbed this at 6, right after the reopen last night, 6:10 p.m. If you didn't know, futures trade when the futures market's open. So I was all the way down at 58.75. Oh, other way. Most of my options go the other way. 58.75. So I'm all the way down here. Already down to 5 cents. It's an interesting trade I'm going to keep playing with. Relatively low margin. Why futures? Because the margin is like $1,000. try to do that on S&P 500, they're gonna hold out a very large margin. If you got to do the full cash value, that's like it's like over $500,000 for one. But that they basically held out like $1,500. Now, it's not a $20 credit either. They're ES points. So it's like 0.2 times $50 per point. So I'm actually only in this for $10. And what's the risk? The risk is we drop all the way down through my 58.75 and I'm in trouble, but that doesn't seem very likely at the moment. It's an interesting new idea here. Now, if you were to jump in it right now, you have to be a little more aggressive. Of course, we're up 56 points on the S&P 500 right here. So I thought you can let me know in the chat if you think these are interesting. It's a very low risk, like 99.5% likely that you make all the money. Late today, I'll probably do tomorrow. Same deal. Jump down here, or down. Down is down on this one. Grab the one that's 20, 30 cents. Sell it. You could do it for tomorrow, 6,000. I mean, we could be down there though, 300 points. It's 99% likely to go out. So it's interesting right there. Ugh. I mean, so do you consider, it just depends on what you want to consider. Like, my bias, like, we're kind of bullish in the market still, even with a little baby correction. I think we did end the streak. We go look at the 20-day moving average right there. We got the close below it. So we ended the streak at 67 days. But that can keep going. Now, resistance, 63.45, 618, retrace, and then watch out. First move down, second move down. Put us right in here. But that's still not... Yeah, if you did that 60-30 for tomorrow, you'd be down here. Kind of interesting. It's an interesting trade idea. I found it on K-Info. This guy was doing it. And speaking of K-Info, dun, 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 dun. All time up to $23,000 this year. 23.5. Book to close trades. There you go. Keep rocking and rolling. Just keeps climbing. I do have a few open positions. I'm gonna have to manage some stuff. Not really concerned. Not really worried. Everything's still humming along. Still bringing in premium. 95% win rates. And I was like, I got on their Discord and I was like, hey, I'm not ranked for all time. And they changed the requirement to you need 100 trades in the past year to be ranked on the all time. I was like, cool. What's funny though is last week I had 86 trades and I closed several, and now I only have 87 trades. So I'm not sure that count is accurate. Look at the reports. Come in the statistics, just in case you wonder how we're rolling. Profit factor, 17. That's pretty good. Pretty good profit factor. P&L 23. P&L from wins 24. P&L from losses negative 1.4. Not bad. Not bad at all. All right. What can cause it to be bearish at this point? CRE seems to be the big problem nobody talks about. That's the problem I think might blow out, because everybody thinks it's no problem, but that's the thing Trump is worried about the most. If you think about it, why does he keep hammering on the interest rates? He's in real estate. He knows there's a problem. Over a third of the U.S. banks are 300% over leveraged on commercial real estate. That's 300% over their net liquidated equity value. They have 300% exposure. You'd be like, well, this commercial real estate, it counts as collateral. But what if, like during the housing crisis back in 2007, 8, great financial crisis, whatever, global financial crisis, whatever you want to call it. What if real estate takes a big step back? 10%, 20%, 30%? What does that do to the collateral on the books? And then you're 300% over leveraged. All of a sudden, 10% is 30% haircut, 20%, 60% haircut, 30%, 90%. Suddenly your losses could exceed your net liquidation value on the entire bank. That's nobody thought housing was going to cause a big problem back in 2007, 8. Nobody was really talking about it, and it was the straw that broke the camel's back when, nobody expected Lehman Brothers to hiccup, to flinch. Nobody expected Enron to flinch. So it's not all over again. This is worse. This is like, it's probably 20 times worse than 2008. It's bigger. It's much, much bigger. I'm just, what could be the problem? So that's what could be the problem. Everybody asks me, what could be the problem? That right now, most plausible. Yeah, so interesting over here too. We're hanging out DGS2, Fed funds rate, hanging out right at 4.33. If they cut half a point, we dip below the market rate. Half point cut puts us right there. That's below the market rate. So they can't cut a half point. Can they cut a quarter point? Puts us right on top of the market rate with no margin, no room for error. They can't cut a quarter point. They can't cut. If they cut, they're below the market rate, and then they risk having a raise and be stupid. If this, so DGS2 is the one to watch. If DGS2 creeps back, and we're at 4, it creeps back up through 4.25, 4.5. They might actually have to raise rates to keep this baby under control. The less interest there is in buying US Treasuries, this is one reason why the crypto bill was so important. They're trying to create a buyer of US Treasuries. This thing creeps higher, though. If interest for Treasuries wanes, they're going to have to raise rates. Another problem that can happen. And even if they... That's weird. Sorry, phone call from somebody I don't know. So even if they cut rates, cut the Fed funds rate, no bank has to write any loan based like this Fed funds rate doesn't set the rate for any bank. Like the lending rates aren't based on this. I had a long conversation with Grok about it, and Grok was like, well, you're right, but you're wrong. I'm like, how am I wrong? Like, there's no bank rate tied to this. I was like, you just said there's no bank rate tied to this. Well, banks set the rate based on that. I was like, no, you just said. So even Grok parrots the narrative that this is setting the rate, but it's not. Like, what if they cut? GGS2 went up. A lot of the banks set the rate off the Treasury. That's off the market rate. The market rate's trading independent. This rate was climbing and the Fed chased it up. Then it's kind of gone into this chop here. Maybe. I have the feeling that we should have stopped right here. And we probably should have parked it right there, like between 4.5 and 4.75. Should have just parked it there to begin with. Slightly above where we are now. Now, some of the news on Friday, when the jobs report came out, they went back and revised the jobs in 2024. All those millions of jobs that were created under Biden, they revised that down to 820,000 jobs. So almost 1 million jobs just evaporated out of last year. So these are the problems like that are cooking right now. This rate being, these rates being high keeps pushing our national debt higher. You want to look at the 10-year. This is another reason why they're not doing anything. That 10 years above Fed funds rate. They're looking at that and they're going, we can't cut. See, they tried to push it down. They tried to push it down with the cuts over here. Didn't work. Market said, nope. They held it down here trying to pull the market rate down. And they're like, oh, sugar honey iced tea. And then we had to do the fastest rate raises in history. Right over here. Rates down here didn't pull those 10 years down. And what is mortgage set off of? Basically the 10-year. There's risk involved in some of this stuff, and the market knows it. And if there's no interest in buying a 10-year Treasury, well, the rates go higher. There's no interest in buying a 2-year Treasury. The rates go higher until there is interest. Kind of works opposite to normal people's concept of how this all works. So looking at the market today, I'll put that back where it was. DGS. Put that back to that. Jump back over here. We dropped below the 20 days, so that one doesn't matter anymore. Broke that record. Now, first move down. This was pretty vicious. Support right here. Resistance right here. At funny enough, at the gap down. 618, gap down. Now that 618 wasn't sitting there before we made the bottom right here. It's just kind of funny how it all comes together with confluence right there. 63.40. Confluence being things that come together at the same point, same place on the chart. So that'll be resistance if we turn down there. Dip right there. All right. So 63.64 upside on the futures. for the 1 hour. Pushing through the 15. As I said, 1, 2, 3, 4, 5. How far could we maybe expect this fifth to push? Could push right up here around 63.30. Then we see some resistance before we can go on higher. NQ, kind of rolling on the same path here. 30-minute resistance coming up. Both of those. Russell, not really participating. Looks a little lackluster. Be careful. This one rolls down, breaks through the daily roadmap line. We already tagged it. Things can get a lot worse really fast here. Pull this over to the high, pull this down to that low. So resistance sitting right here. 2250 or 2230, 2240. So watch for that one to come back up and turn down. If we make a lower high, come all the way up here, make a lower high off this, could spark some big downside in the small caps. CL, as briefed, came up, coming back down. Now the test. Can we get through this support? If we do, coming on down to 50 area. Gold, coming back up. First move, retrace. Second move. We're in that bearish potential resistance spot that can lead to the next leg down. First move, second move, third move. Be careful. Bitcoin. I think Bitcoin does this almost every time, right? It's going to save. No. Refresh. Cool. Crashed it out. Freaking thing. What's up? Bitcoin. This has done more of a complicated correction here. Now, if it's 1, 2, 3, 4, 5 down, first move down, and the retrace here overlap, that's still a corrective potential A wave. So what do we got to look for? Got to look for what happens on this retrace right here. Now, if it's not like a leading diagonal down for an A wave, maybe it was a B, C for a W, fast wave X, and then 1, 2, 3, 4, 5 in here. Kind of sloppy, but I can make the case for it. We dive into the subwaves of that last move there. Not really clean, but potential 5-wave down into that low. So it would look more like a WXY. Right there. The Y being impulsive. This could be done. So this is, again, we got to watch what happens right here on this climb out. Can we build some 5-wave price action? If we do, it sets up the next target up here, 124, 126,000. Resistance on the 1 hour, hanging out at the roadmap line right there. And upside right there. Ether dropped below, found the bottom potentially. Coming back up, testing the 1 hour, bounced off the 4 hour. Yeah, beautiful place to climb again. Going up, retest that 48.70 area. We can get through that, unlocks the door for potential much bigger upside. If we bounce off of that, not great. Why? 3 big moves. Absolutely beautiful correction. If we stop at the quality point where A equals C, which is right there at 48.70. We can go lower low. NKD, global liquidity indicator. We dip back into the box. Funny enough, found support right at the equality. A move equals C move right there on those lows. We break back above that point, probably going higher, probably going to break out through last summer's high, potentially taking this whole crazy thing up epic levels here. So we did the retrace on global liquidity that I was talking about that might be needed before we can push on out. So key level right now, watching that high from last summer. We break through it, probably going on up, new highs. Dollar. We overlapped. Came down into the overlap zone. That tips the odds that we may see this dip back here. Gotta watch. Now, overlap can be possible and not cause for concern, but just having overlap starts tipping the odds. We're back, we're gonna see a new low here. So if that pushes down, gold might push up. But if we maintain that minor overlap right there and go on, push up higher, gold may have some stress. So we'll see what happens. Correlated when they're correlated, not when they're not. Apple. As I said on Friday, you might want to book that gain that you had. This is a longer term hedge for me out to December. That's the first move down. Now we're probably going to work on a retrace. Could be a 618. Could come back up to the roadmap line. We'll see. This could be the first move down. Lots of stuff popping off here. So we've got that high. We've got this low. Looking for resistance up here around 210 for Apple right now. Amazon showing weakness. Be careful. Dip through the roadmap line. Can cruise on down. Google just churning right there. Meta poked out. Failed to touch the target. So we may see 793 on the upside. Microsoft. Boom. Watch out. It's met conditions to spark a bigger retrace. NVIDIA met conditions to spark a bigger retrace. Could go on out to 212, but be very careful at this point. Tesla. Higher lows, lower highs. Watermelon squeezing this baby out. We are lower. We did dip lower here on Friday. We did dip lower than that reaction on earnings. First move down, retrace. Second move down, didn't quite reach it. So we keep doing that. We didn't do it here. We didn't do it here. Are we going to reach down in here, finish one of these up? Or are we just going to keep squiggling in here, winding it up tighter and tighter? Couple big things. Didn't really get much media attention. Robotaxi service launched in San Francisco. Much bigger area than Waymo's. The area in Austin expanded greatly. But they still have a safety driver, so doesn't count, right? Doesn't count. Anyway, Netflix didn't hit the roadmap line yet. Didn't really participate in Friday as much. Still got some downside to go. So I go pull gainers, everything moving $2 or more up. IDXX, that's biotech. I'm staying away from that. Spotify, I was speculating that we might see a bounce off this roadmap line area. Didn't actually touch on the daily. Bummer. I wanted to see it touch. So this could be done. Potentially done. That high, that low. We break back above that 618 zone. 800 would be the upside target there. Wayfair never has what I need. Expanding the volatility here. Could be potentially done on that. And one big up. Need a retrace before I get continuation. ASML. Well, we hit the zone. Look at that. Fully tested into that. I'm not interested in picking anything up yet. Could be, but we'll see. Still have a little bit further to go. 664. Potential 618 retrace of that whole big move up right there. So we'll see what happens here. Restoration Hardware. Roadmap line coming up. 242. MSTR. Came down darn close to the roadmap line. Be careful. This wouldn't take much to finish this baby up. One little hiccup on Bitcoin. Speaking of Bitcoin, there's potential that we have one more squiggle down to finish up that pattern. I didn't dive into that too much. The line in the sand, as long as we're underneath that point right there, could be the 1, 2, 3, 4, and we get the fifth wave down. So if we pop through that 115.8, 115.9 zone right there, probably tips the odds we're done on this. Otherwise, this could be a move up, retrace, move up, lower low, out here. ETN. And probably going up to 409. Newegg. Keeps being crazy. Remember, this did a reverse split. Danger, 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 danger. It's dumpster fire type stuff right there. Look at that. All that price action underneath the verb. Coming up into the roadmap line. Calm scope. So this is setting up a bigger potential here. First move up, retrace. Next move up, 22, 38, 79. It's bearish if we stop. Bearish stop in here. More bullish if we stop up here. App loving. Holding up. Look, that held up really well on the fleece out last week. Indicating we might break out and go 602. Sezzle held up really well. Also indicating we might go on up to 315. Leverage, leverage, leverage. Transmed. Starting to tip the odds. We're going to go up to 153. APH. Amphenol. That getting way over its skis there. 121 next upside. Coinbase looks like we're, with that move on Friday, this looks like we're setting up for roadmap test or a 618 retrace. One or the other. Back down in the zone. Like, that would be the top of it. This would be down in it. That's what that looks like. Korea, SCS, steel case. And equipment supplies, office. Let's see, we get first move up, retrace, 50%, potential bounce. Has a measured bounce in place, that high, that low. Looking for something up in the 21 to 27 area right here. LEU. It was just a hiccup last week. Might be able to shoot off. Not really participating at all. Logi. Roadmap bounce in place. Can we get continuation? Gonna take a close above that 93 area. 98, 99 on the upside. CLS. Rock and roll, baby. Watch for the retrace back to the roadmap line. And fresh pet. It is pet food, right? I mean, fresh pet. You call it pet food. I don't see any humans eating it, so it's pet food. Pushing lows. Watch out. Can break down. Keep going. This could be a bounce point. It was a 618 retrace. Looking for this to hold. Turn back above the roadmap line. Push on out. If we don't, well, could come down to 30. EMD. If we get above this zone, this high from right back over here, it's like the last line in the sand that I'm looking at. At tipsy odds, we're going on up to 300, more than likely. AVGO. Rock and roll. Little baby pullback, probably going on up to 636. 363. Excuse me. 363. My flip it, reverse it. As Willy Wonka says. FUTU, hold here, going up to 191. PLTR reported earnings this morning, or no, this afternoon. Be careful. That's price for perfection. Upside right up there. 190, 186. So 186. Downside right now. Support down here around 110. Remember, price for perfection. We did a big pullback over here. Probably need another one. We're pushing leverage, leverage, leverage. Circle. On the path, highway to down. A line, got whacked. Lowest low. SMCX, SMCU, leverage, leverage. BNTX. This is chopping around. Potential to pop up here in a bearish correction. And then continuation lower. Rocket Lab 2X, SPXL, took a nice step back, has potential to go on out to 210. MDB, grinding on the roadmap line, potential to find support here and turn higher. I still think MDB has potential to go lower though if we don't hold the roadmap line. VST 224, VRT, potential going up to 181. Zip. Healthcare. Reverse split. Launching off. Garbage. A-Lab. 173. Upside. Reddit. Hey, this thing. Tipping bullish. 1, 2, 3, 4, 5. Yeah, watch out for if we can push on up. Like it's set up the pattern to push on up to 269. I'm not convinced though that we won't get another pullback. Maybe to the roadmap line, and maybe it takes pushing up the roadmap line just a little bit more into the vicinity of this consolidation, pull back, and then launch it on out. ARM, back to the roadmap line. TECL, watch out for that to come back to the roadmap line. Of course, that could be all we needed, and we push on out to 135. Snow. This is probably going to come back to the roadmap line. Give another opportunity. Leverage, leverage, core weave. Watch out for that to come all the way down. It's potential we could hold in here at 95 and turn higher again, but be careful. Capital One, probably going to come back to the roadmap line. And not enough candles to do much with. Just choppy. I don't like the choppiness of this. Low price, choppy, dumpster fire in nature. Yeah, just not enough candle data really. AMUU. If you want to believe in AMD going out right now, there you go. Another dumpster fire. Yen. Probably come back to the roadmap line. Baidu chopping in here. KGS. It's bearish. Bearish. Below the roadmap line. Hitting targets on Cloudflare. TSEM. Potential to take this on higher. Here's the high. Here's the low. Retraced. Potential going out to 60. Credo topping out. Watch for the retrace. Tyson. Potential to have bottomed in a giant measured bounce. Could take this up to near 100. Leverage, leverage, leverage. AMT. Potential to bounce off the roadmap line here. Take it back up to 206, 210. And then kick off the bigger upside. Potential to 280. Oklo. Grind the resistance. Watch for the retrace. Stuff that is declining. Ouch. First move, second move, third move. Probably got more to go. Absolutely beautiful correction down here at 36. Big. Probably going lower low than the IPO. Berk B. We'll have to see. We're probably going to retrace till Warren Buffett's predecessor takes over next year. AGIO. Garbage. Pharmaceutical stuff. FGF. I wouldn't touch that. RAPL. More biotech. On Simi. Potential to hold the roadmap line area here. Turn higher. Here's the high. Here's the low. 65 will be the next upside. BRKR. Making new lows. USO. Watch out for this to break down through that support and go lower. SCO will be a way to play. Oil dropping out. That must mean natural gas is coming on down to the target zone. Setups for today, ENB. So here's the high, here's the low. Potential entry, 65, 66 up there. LNG. Potential going up to 268. Big picture. Smaller retrace here. Potential to come up to 250. MYE. Here's your high. Here's your low. Potential come up on 16. And PARA. Here's the high. Here's the low. 13, 14 area right there. My bias for the day. Up into that resistance that I talked about. Looking for this to come on up to possibly 64, or oh, not 64, right there. Possibly 63.80 on futures. That would be roughly 63.45 on cash. Then we'll see what happens. We get above it, going on up. If we don't, getting crushed. We turn down off of that. Watch out for the next leg down. That can take us down here. Low 61s. Have a great day, everybody. We'll be back again tomorrow. Same bat time, same bat channel.